Hi there, Serial Trader here. Let's do an end of the week update on the major US indices and starting off with SPX, looking at the Elliott wave chart here. And interesting week. So throughout the week, things were starting to look almost ridiculously bullish, and it looked like we were just going to sail right up to new all-time highs, or certainly had that feeling to it, as we'd gotten above this former resistance zone we had. But then today, basically, that was all undone, and the bearish case, at least short term, has certainly strengthened significantly as of today's trading. Now, I don't normally comment on fundamentals, as I certainly don't position for them, as I just follow price action and patterns and everything. But I will comment that it's certainly hard to embrace new all-time highs in the stock market when you have, fundamentals certainly deteriorating domestically and globally, and the yield curve starting to invert and things like that. Just doesn't set a super bullish tone, at least the kind you would expect for something that's just going to rocket it, up past all-time highs and beyond. So there's that. Now I remain open-minded that whatever setback we have here could just be another pullback, a correction within a larger developing uptrend. That's certainly still possible. Not making any assumptions here, but at least the very near-term direction now seems to have turned back down. And I still remain very much open to the possibility that this Elliott wave expanded flat interpretation, where we have our wave one down into the October lows, and then everything since then has been this A, B, C, so 3, 3, 5 expanded flat wave 2. And I suppose this could also be 5 down for A and 3 up for B as well. So it could be an A expanded flat B and then down in wave C. Either way, though, you'd be expecting a very large move down in either a 3 wave or a C wave. I'm still very much open to that interpretation, and I kind of like it actually because so here on this proposed B wave in the December lows, you had all the bears extremely confident, all the bulls just terrified, and then now that you've done this 5 wave rally, you've completely taken out the bears, sucked all the bulls in, basically maximum confidence at the high, maximum fear at the low. So you basically cleaned out both sides of the sentiment range. And now basically what everyone least expects. So even the bears basically just expect a pullback at this point, and the bulls don't even expect that. They just expect going up every day forever, or at least some of them do. But very few expect an actual move down to new lows after such an extreme move up from the December lows. So that, just because hardly anyone expects that, makes me kind of like this interpretation that much more. But certainly getting ahead of ourselves. This has a long ways to go, has a lot to prove before we can start getting confident about new lows. But I do feel that there's a compelling case to be made that we have a top here. So throughout this advance, and certainly for maybe a couple weeks now at this point at least, we've been having divergences on our momentum. Okay, so RSI and the MACD moving averages and other studies, if you want to use them, have been making lower highs as the market's been making higher highs. So that's a nice bearish divergence. And also, you had this area of resistance, which we initially broke through, but now you see we've come down and rejected that. And certainly on a closing basis, we only just poked above it on a closing basis, and now we're back below it again. So right back on that 2800 area. So that could be a pretty compelling case for bearish divergences, false upside breakout, and now a rejection of that false breakout. And certainly we'll know more next week as to what kind of follow through we have to the downside. Now I have this Elliott wave final channel drawn here, where you connect the extreme wave 2 with the extreme wave 4 off of the wave 3 high. And as you can see, we only got up to that median line here on the 5th wave, which is a nice place for it to fail, as the 5th wave should be weaker than the 3rd wave, right? And good confirmation that we're onto something a little more bearish here would be getting below the lower channel line, which we haven't done yet, although we're kind of just another good negative trading day away from doing that. And another very important area I'm watching is this wave 4 low here, and that's at 27, 22, 27. If we can get below that, then we have something more substantial underway, and then I would at least be looking for a decent Fibonacci retracement of this advance, if not something more extreme than that. But initially, you'd be looking at least, if we can get past that wave 4 low, you'll be looking at least the 382 retracement. And more realistically, or more commonly, I should say, you know, between a 50 and a 618% retracement, 61.8% retracement. Then if we get down to the 786 or lower, then we can start getting pretty confident that, okay, maybe the most bearish interpretation is warranted and we're going to make new lows. But we'll take it one pattern at a time. At this point, it's way too early to make any assumptions. Okay, with that being said, I also like that we came up and almost got, let me just zoom out here for a moment. I like that we came up and almost got to this lower boundary line that was formerly channel support through the entire 2016 through 2018 rally, and now that's become apparently channel resistance. So that's a nice kind of channel signature there as far as the bear case goes. Okay, so that's probably good for the wave chart. And again, not to make any assumptions here. We could just be doing a corrective pullback within a further strengthening rally, but be aware that this expanded flat scenario is very much in play still. And again, the only way to truly invalidate it would be to make new highs, and that seems unlikely here, at least for a while. Okay, now we'll go to the Thinkorswim candlestick chart. So I think some interesting things are happening here from this perspective. So we had a very bullish move up here from those lows that we did on the 8th of March, and we basically just went straight up. Had a little bit of a two-day pullback there, a couple doji days. Still use the T-line support, so certainly nothing threatening there. Then we did a bullish engulfing candlestick, and things just couldn't have looked more bullish. In such an extended upward condition, we just had two dojis. Didn't even break the T-line. Did another bullish engulfing. Looked like we were just ready to launch even higher. And now we've actually rejected that bullish engulfing candlestick on the daily. In fact, we've invalidated it by going below the low. And we closed below the T-line, which is significant because that's barely happened at all throughout this advance. So that alone is worth noting. And you can see we've gotten that overbought condition again on the oscillator. Now we're coming off of that condition. Certainly nowhere near oversold at this point. Just starting to come off overbought, rolling over. We're basically sitting on that 20-day simple moving average, which may serve as some initial support, or at least that's where the day ended today. Whether it serves as support or not, we'll find out on Monday. But I thought it was interesting, basically, that you couldn't look more bullish. We had another buy signal, bullish engulfing, and then immediately extinguished today. And sometimes the best sell signals are failed buy signals, and vice versa. Sometimes the best buy signals are failed sell signals. So that's worth noting. Failed bullish engulfing. And you can see we're not quite at the golden cross. And if we continue on with some weakness, that golden cross won't happen. But it's certainly, that 50 is getting closer to that 200 on the S&P. Now, one thing I thought was more interesting than on the daily chart was on the weekly chart. And on the weekly chart, we have another sell signal. So this is an inverted hammer. So a bearish hammer sell signal on the weekly. And you can see we're firmly rejecting those higher prices with that long upper shadow. And basically on a weekly basis, couldn't really get above that resistance area on a weekly basis. So we're rejecting that. And that's definitely a weekly sell signal. But again, we have to be realistic. So over here we had that nice weekly sell signal, and then we basically thought we had confirmation with a bearish engulfing weekly. It certainly looked bearish, and then immediately eradicated the following week, and we made new highs, but not by much. And this time rejected those highs swiftly and did another sell signal. So that might have been the final push. We'll see, but certainly a weekly sell signal starting to roll over from that overbought condition on the weekly oscillator. So as it currently stands, further downside seems warranted. Okay, so that's SPX. And we'll go look at the Dow. And some things to point out on the Dow here. So the Dow, well, I'll start off. The Dow started doing a golden cross here with the 50 going over the 200. But it's a little bit diminished considering the other two indices are not doing that. So that's a non-confirmation of that golden cross. Another non-confirmation is that the Dow continually failed to make new highs when the other two indices were making new highs. And you can see the Dow never made a new high above its February 25th high, which is a divergence from the other two indices. And most recently, you can see we tried to push up, still made a lower high, and now a strong down day, and a close below the T-line, 3 T-line cross below the T-line. Didn't even get into the overbought condition on this daily oscillator, and now we're coming back down again. So the Dow showing more relative weakness here, despite it the only one having a golden cross starting on those moving averages. The actual price action has been showing the most weakness among the three indices. Now on the weekly, see if there's something there on the well, first, so daily, the Dow did the same thing as far as having a failed bullish engulfing. So we did a bullish engulfing there on Thursday, and then we extinguished that by getting below the low of that candle. So we have a failed bullish engulfing, which is a bearish signal, and that's on the daily. Now on the weekly chart, we have a not quite a hammer because the body's too large, but certainly a long upper shadow rejecting higher prices and a decisively lower week, but still hovering around that weekly T line. So, and the same goes for the S&P. I think we need to get below that weekly T line to start adding some confidence to the bear case. So this is kind of the early signs of something potentially more bearish taking place, right? Now I'm just going to go double check that weekly on SPX because I don't think I looked at the weekly T line in any detail. And okay, weekly T, yeah, so we're nowhere near the weekly T line yet on SPX. So certainly some work to the downside there would have to be done to get closer on that, but certainly just about there on the Dow. Okay, anyways, we'll move over to the NASDAQ composite. And the NASDAQ composite, so NASDAQ was looking the strongest of the three indices, and this isn't surprising as all the high beta tech names usually move more in both directions, more of the downside and more of the upside. So this is no exception. But we did a bullish engulfing candlestick yesterday on the NASDAQ composite, and a strong one too, engulfing the two prior candles, closing near the highs. That's been extinguished today with a strong down day, and it closed well below the T line. And you see into the overbought condition on the oscillator, starting to come off that condition, so rolling over. So this is starting to look more bearish as well. And also point out, this is the largest down day we've had. So this is the biggest red candle we've had since the entire rally started off those December lows. And I believe that's the same for SPX and the Dow as well. So just the fact that we had the most bullish signal you could possibly have, looked like we were just going straight up to new highs. And now we've had the largest down day that we've seen in this entire advance, since this entire advance started. That's certainly notable. And nowhere near a golden cross here on the NASDAQ composite either. So more in line with SPX. And on the weekly for the NASDAQ, an inverted bearish hammer. So that's a good weekly sell signal, long upper shadow, small real body. Closed lower than it opened. Closed lower period on a weekly basis from last week's close. So that's certainly a fairly ideal looking weekly bearish hammer, inverted hammer. And we'll see if this has follow through. Again, the NASDAQ has some work to do to get down below its weekly T line, but we've certainly already gotten there on the daily. Oh, and go back to the weekly momentarily. You can see on the weekly we are starting to come off that overbought condition, so signs of rolling over there on this oscillator. So yeah, things are definitely looking more bearish here. And basically that all happened today. Amazing what a day can do. Okay, now we'll just quickly go back to SPX because I just want to double check. So is this candle the biggest red candle, most bearish candle we've had since this advance started? I believe it is. So it's just slightly larger than this one, which is the second largest one, and that occurred on January 3rd. So definitely notable that we've had the biggest down day today since we started that advance in December. And I believe the Dow fits the same picture. And no, the Dow actually had a larger down day there on the 3rd of January. But it's definitely, you can say, the second largest down day for the Dow since that rally started in December. All right. Now a quick look at the VIX. Okay, a look at the VIX, and VIX certainly showing some signs of life here, although to get really confident that we're onto something more menacing, I want to see a decisive break of this level on VIX, which would be 1833, and I'd like to ideally see it close well above there to really enforce that, you know, VIX is going up and equities are going down. So far, it still can be said, sorry, it can still be considered a lower high on VIX as long as we stay below that point. But again, next week we shall see. Okay, now before parting, we'll look at the VIX tool, and this has given another sell signal. Okay, so here we've I'll just duplicate this. Here we've had a clear, in fact this is a fairly long drawn out one, we've had a clear divergence between VVIX and VIX, and that was where VIX was making lower lows and VVIX was making higher lows, and for an extended period of time, which makes the divergence stronger. And then that was kind of a sign, along with the other divergences we could see on the indices as far as technicals go. Now we've again put off a nice signal. We've gotten above the red moving average on VVIX after this clear divergence, and we've gotten below the blue moving average on SPX. So we're officially back on a sell signal here using this tool. So that's worth noting. This certainly lines up with further bearish expectations, at least on a short-term basis. And some of these sell signals have been pretty good. So this last sell signal we had, even though it was just another pullback, I think I pointed out in the last video, was good for around 70 or 80 points to the downside on SPX from when the signal, you know, went off. So here the signal basically went off, got confirmed at 2830 or so. So far we've gone as low as 2800. So even if we just get the same kind of move as last time, which really wasn't much, you still got another 30, 40 points to the downside in SPX before it would be done. And this might have a lot more downside follow through than the last one, given the context of where we are. But we'll have to wait and see. All right. So that's probably good for now. Definitely check in again next week. And over the weekend, I'll certainly do a couple update videos on some individual names that have some things worth noting. And I guess just kind of words to part with. We're definitely on a sell signal again, although we have to respect the fact that previous sell signals didn't materialize into anything significantly bearish, but that doesn't mean this one won't. And the market certainly appears to be struggling with these upper levels here, especially on a weekly closing basis. So next week we'll learn more. I'm certainly leaning currently towards something fairly bearish, but certainly remain open-minded. If we get a nice corrective pullback and it finds support, starts going back up again, hey, I'll be the first to you know, place some more bullish trades. But in the meantime, let's see what we can get here to the downside. All right, Serial Trader signing off.